Tesla ended up hitting our target of $220 today, and it looks like as of now, price might be rejecting off of the market bias. You guys know that we've been bullish on Tesla ever since we pulled back into our institutional buying and smart money area back on Monday, the 5th of August. Now, when we're looking at any chart, and specifically with Tesla chart, we want to know three things. We first want to know what is the current trend. If we zoom out to the weekly, we know that now we're over the market bias, which is this green tape-like indicator. So the trend has shifted to bullish. We also want to know what mode are we in? Because we're in this bullish trend, we're obviously not breaking out and in what's called an expansion, which you can see back here. Right now, we're in what's called a contraction mode. So price is still in an uptrend, but it's pulling back down into a support level. And the third thing that we always look for is bullish accumulation. So by using the BX trender, which is this indicator at the bottom of your screen, what we're looking for is lower highs, which is this dark red turning to light red. That is showing bullish accumulation and that Wall Street's actually coming in and buying up the stock. And then we want to see higher highs, which is when we start to get green on this histogram chart. That is showing that there's actually money coming in behind it. For instance, if we look at this sell-off from the 31st of July all the way down to 184, what was the BX trender doing? It was continuing to make lower lows. We would not have bought that dip because there was no confirmation of that. Now, our goal for this week and our target was to see price move its way back up to $220. $220 was the high we were expecting. We hit $219.74 today, but that's because we know that now this market bias on the daily chart, this red one, will most of the time act as a resistance. If we look at this setup from a broader time frame, it looks like, we're going to see Tesla back at 270 in the next couple of months. But I think that there's still a chance that we could short-term reject at 220 and pull back into the institutional buying zone one more time. And that's why I closed out my calls yesterday for a loss. And I still think that Tesla can come up, fill this gap, can continue to move up to 270, but this is really going to be that area that we have some indecision. Now, the reason that I didn't hold the calls, a lot of people were asking in that video yesterday, because there's a chance we could push through the market bias, was really because of the way that the weekly BX trender is looking. So if we look at the weekly chart, yes, the market bias held, but the BX is still showing lower lows, which means that there's not enough bullish accumulation on the bigger time frame to confirm the bottom. So until we get confirmation of a higher low on the weekly BX trender, I'm going to hold off on my long position for Tesla. What I'm hoping to see, and obviously we're not going to trade based on hope, would be this rejection off of 220, one more time back down into $200, which is where I would look to acquire shares or directional call options, probably for February or March, back within that institutional buy level. I'd be looking to get in at my optimum trade entry, which is about $188. Stop loss would be set at break of structure, or basically $165, because this would take out these prior lows. My first take profit would be up at $270, which would be a 45% return. From there, if we zoom out, our secondary take profit back up to this high of $300, which was July 19th, 2023. And that's why $300 is my target for end of year best case scenario. The short-term bullish case would be that price just continues to push up, maybe even fills this gap to 240, 244 before pulling back to test the bullish market bias and then continuing our way up. Those are the two ways that this is going to go. I believe that we'll probably see price pull back first. I think we'll reject off of 220 and at least see $200. But if the other happens, if price moves up, rejects off 240, I will be looking at my re-entry on a retracement back down to that 224 level. And I'll keep you guys posted on how I play it, whether I sell cash secured puts to hopefully get a position, or if I just bite the bullet, enter with a directional options play like I did last time, start with a small amount of position sizing, and then work up from there. If you guys want to learn my exact system, everything we went over in this very simple two-step trading system that requires only 30 minutes per day from 3:30 to 4 p.m., you guys can take all of our courses Link is in the description. The one that goes over the indicators you see here is called the market bias strategy. And if you want to trade with me and the team each and every single day, you can check out our private academy. The link is in the description. I'm not over there just spoon feeding you guys trades. I teach you guys the strategy. We work and build our lists each and every single week together, and we're there to help you guys along the way because we are on the same path that you are at. We have people who have obviously been there before and done what you're trying to do. And more importantly, in my opinion, people who are actually on the same path, but at the same area you're at, seeing other people going through the same things that you have. So if you guys want to join that, link is in the description. I'll see you guys next time.